next up, Hazer Group. Hazer has an ASX code of HZR. It has a market cap of approximately 115 million. Hazer Group is pioneering the development and commercialization of the Hazer process, which produces low-emission hydrogen and graphite. Presenting from the company today is CEO and Managing Director, Glenn Corrie. Glenn, welcome to the network and please take it away.
Thanks, Manny. Great to be here. And it's also, as you've said, a great week to be talking about clean energy technologies, hydrogen, graphite and critical minerals. As Sam mentioned, the federal government this week released the budget, $7 billion to be injected into clean energy, a whole bunch of that into hydrogen technologies, $8 billion to be injected into critical minerals over 10 years. It's the shot in the arm that, that the sector needed. Why is this relevant to Hazer? As Manny said, we've developed a very advanced, unique climate technology that serves both the hydrogen market and the graphite market. So it's very welcome news for us at Hazer, and we're pretty confident that this is going to spur demand for our technology. Moving on to the next slide. Hazer, for those that are not aware, stands for Hydrogen and Zero Emissions Research. That was the vision 17 years ago. This is the reality today. It's a very advanced, low cost and zero emissions hydrogen production technology that is available today. In front of you there, a bit of a recap on the technology. Effectively, we take methane-rich gas, which is 25 times more harmful than CO2. It can be in the form of LNG, natural gas, biogas, wastewater treatment gas. And simplistically, our technology splits methane into its pure elements of clean hydrogen and carbon in the form of graphite. The X factor for our technology is that we use iron ore as the catalyst, which significantly reduces the operating temperature of our reactor to around 800 to 900 degrees. Why this is important is because pyrolysis occurs generally between 2000 and 3000 degrees. So you can see that we can do it at 50% lower temperatures than the competition out there, which is a major advantage for our technology. So think of the tech as one tech that serves three very valuable markets: the hydrogen market, the graphite market, and of course the overall decarbonisation market. Next slide. And we're doing it for real. That is the picture of our commercial demonstration plant in front of you. We've scaled up the technology now successfully 5 times. We've been on this journey for 17 years, as I've said. The commercial demonstration plant has started up operation in January of this year, and we have just literally in the last week gone through 100 hours of operation, which is a really significant milestone for the technology. We've got a test program. If you go to the next slide, we've got a test program that's structured over the next, perhaps one back, over the next 6 months, which effectively aims to demonstrate our technology on an industrial scale and on a continuous basis. So that is preparing the technology for commercialization. The tech is proven. We're TRL 7, and we are now getting it ready for deployment and commercial application in industry. And you'll see those global partners that we've already captured on the right-hand side. Next slide. We got a transformational year ahead. The stars are aligning for us. As I've said, the CDP in our demonstration plant is now online. There's a whole bunch of milestones ahead of us in respect of the various technology milestones, and it's all looking like it's on track so far. We've got 3 very important commercial projects worldwide. We have literally just signed a licensing deal in Canada, the first licensing transaction that we've done for the company. There's more to follow with our Japan project as well as in France. And thirdly, there's a huge pipeline of potential opportunities now with having our CDP online and operating. We've had a significant uptick in terms of the interest in the technology. So we're very excited about the next 6 to 12 months, and in the longer term, further partners and customers that see the value in the decarbonisation of our technology. Next one. That's our corporate overview. The 2 things to highlight here is that we've got the backing actually of a very sophisticated hydrogen technology fund out of London, AP Ventures. Behind them are some very serious players, Sumitomo, Mitsubishi, Temasek, the Singapore government, 2 funds, Equinor, Anglo American. So we've got some strong validation through our strategic investor. And we've spent about $100 million on the tech over the last 17 years. So we spent a lot developing the technology. We're now into the stage of effectively moving into commercialization, where we will move into a licensing model as opposed to a capital-heavy model. So it's a capex-light business model, which I'll speak to very shortly. Moving into the highlights of our stock. The market is big. A lot of people don't appreciate how large the hydrogen market is. Green box in the left-hand corner. Today's hydrogen market is almost 100 million tons per annum. All of that green wedge on the chart on the left, is effectively produced with an incumbent technology called steam methane reforming. Steam methane reforming takes gas as a feedstock, mixes it with steam and water, and produces hydrogen. But the byproduct of that process is 10 times the CO2. Every ton of hydrogen produced is associated with 10 tons of CO2. That means that today's market is producing over 1 billion tons of CO2. That is Hazer's disruption. Same feedstock, lots of hydrogen, but instead of the carbon dioxide, we have a graphite co-product with 0 emissions. So you can see how cleverly we can fit into the existing market and the disruption of steam methane reforming. Electrolyzers, you hear a lot about green hydrogen. That's the blue bottom part of the blue chart on the right. It's just pure thermodynamics that is 7 times harder to split a water molecule and 7 times more costlier to do that than split gas. So it's going to be a lot more expensive to apply electrolyzer technology to produce hydrogen than it is to do it with Hazer technology. Next slide. And we plug in. So the technology that we have developed co-locates with existing infrastructure to supply hydrogen to the end user where it's required. And so we effectively will plug into an LNG facility, a refinery, a petrochemicals plant. Anywhere today that demands hydrogen, we can essentially plug a Hazer technology in and provide hydrogen directly to the customer. Next one. The cost is a really important factor for hydrogen production. Chart on the left shows the dollar per kilogram of our technology across 3 global markets, Asia Pac, Europe, as well as North America. North America, to start with, we can provide and produce hydrogen in North America, where gas is about $2.50 to $3 an MMBTU. We can provide hydrogen for under $1 a kilogram. In Asia, where gas markets are significantly more costlier, up to around $10 to $12 an MMBTU, we can still produce hydrogen today for around $3 to $3.50. If you look at the chart on the right, we also see upside in or downward pressure on costs as we scale up the technology, as we see the graphite market improving, as well as take advantage of any other process efficiencies in our process. So we see a pathway, even in Asia, to producing hydrogen for clean hydrogen for $2 a kilogram. Next slide. And we've got a growing footprint of customers globally. We've got first mover advantage in North America and Canada with Fortis BC. We've got a partnership with the very large energy utility out of France, Engie Group. And in Asia, closer to home, we have struck a partnership with Chubu Electric and Chiyoda Corp. Chubu, for those that are not familiar, is the world's largest LNG importer into Japan. So really strong validation from global partners that are looking for decarbonisation solutions. We're also working very closely with Mitsui in respect of our graphite co-product. Next one. And we scaled the tech up very successfully 5 times. This journey has started in 2007 in a university. Today, we have successfully scaled it up to the commercial demonstration plant level. It's TRL 7 on the scale of 9. And we're now preparing the technology to deploy it and offer it up to customers, including the 3 foundation projects that we've got, as well as the deep pipeline of potential customers that we're having current discussions with. Next slide. We're a capex-light business model. This is very important because we don't envisage having a project ownership. We will license our technology to customers, and we will take and collect a combination of license fees and royalties on product streams. And importantly, this will enable access to early free cash flow for the company, because we don't have that large upfront capital exposure. That will be for the customers, and that's the model that effectively our 3 projects have currently got, and that'll be the model that we'll take through in the medium to long term. Next. Graphite, I talk about very briefly. Partnership with Mitsui, which is going very well. 2 years of working with Mitsui in terms of developing the market for our graphite. It may be unknown to a number of you, but Australia produces 9 of the top 10 critical minerals. It doesn't produce any graphite today. So Hazer, as a potential future large-scale producer of graphite, is very well situated in this market. Now, every molecule of hydrogen we produce comes with about 4 units of graphite. So we can produce at scale significant volumes of quite high purity graphite that can be used in multiple markets around the world, including steel making, cement, as well as water purification and other very attractive markets for us at price points that are quite attractive as well. Next one. Couple of slides just on growth and monetization. I spoke, I think if the next slide will show the 3 projects that we've got in Japan, as well as Canada and in France. But the next slide is a little bit more detail on our Canadian project, where we have literally signed a license agreement in the last week, which is very exciting. It's a concurrent scale up of our technology 25 times on our CDP. Fortis BC, as I've said, is 2 times the size of Origin Energy. So it's a very large partner that is looking to decarbonize industry in the Vancouver area of Canada. The project has already secured $8 million of grant funding, so it's fully funded through to final investment decision some point in the next 12 months. I think that is it. In terms of our investment thesis, I think it's the final slide. We've got a growth ambition of having 10 plants in 10 years. If you throw all that into a model, every plant that we have will throw off an NPV in the order of $50 to $100 million of license and royalties for Hazer. That could mean that Hazer at scale with 10 projects is a $1 billion platform or larger. So it's a really exciting journey. I think the stars are aligning for us. CDP online, commercial projects in the pipeline, and we've got the tailwinds of the policy, not just in Australia, but worldwide, in terms of accelerating hydrogen and clean energy technologies.
Okay, Glenn, thank you for that. That's you guys are very well progressed now. That looks very, very exciting. So I've got a couple of questions for you that have come in whilst you were giving the presentation. So I'll start with the first one is around whether or not there is anything out there that competes with your technology. In other words, the competitive landscape. And are there any similar technologies out there, or are you very much, is Hazer very much, sort of right ahead of the curve here?
Very, very good question. Yeah, look, we're leading the charge. There's probably 2 of us that are out there. The other competing technology that is the most advanced is a plasma technology. And what they do is effectively use extremely high heat to do the same process. So we've probably got the advantage on lower temperature as well as lower cost. And their technology also produces carbon black as opposed to graphite. So we think we've got the edge over a plasma technology, and that's the uniqueness of it. Our pure competitive advantage is the use of iron ore as a catalyst. It's cheap, it's abundant, and it drives down the temperature of our process reaction much lower than any other available technology today.
Okay, and another question that's come in is asking, to what extent have you had any backing from the Australian government, and do you expect any additional funding or backing or assistance going forward?
Very good. Yes, we have. We've had almost $10 million of ARENA funding. That's the Australian Renewable Energy Agency funding, and you will have seen in the budget that more funds have been allocated towards ARENA for hydrogen technology. So we're confident that some of that is going to also come our way. That 10 million has been a massive support to get our CDP off the ground. And we've got further ARENA milestones still under that existing grant ahead of us in the short to medium term. So yes, we have, and I'm expecting that not just federal, but also at the state level, that there's more grant funding available. With the federal budget injecting the 7 billion and 8 billion into hydrogen and graphite, respectively, then I think we've got the strong tailwinds of further government support as well, Manny.
Okay, and in terms of, just to clarify, there is a question around this, but just to clarify for everybody, you mentioned the word capital or CapEx light. Now, that is that you use that word simply because you have a licensing model for the technology, correct?
Absolutely.
And so the CapEx burden will fall on your customers or your partners, essentially, not you.
Absolutely spot on, and that's one of the real advantages of the Hazer business model. The CapEx light means that we take no CapEx risk on any projects that will be for the customer and for the project developer. We are a small group that licenses our technology to users and customers, and that's the fastest pathway to free cash. We've spent the capital on developing the technology. It's now really over to customers to build plants at scale, and we will collect license fees and royalties in that respect. So we raised last a couple of months ago. We've got good, strong government backing as well, and we've got a low cost model going forward. So we've got a strong robust funding position for the next wave of effectively key milestones for the company.
Okay, great. One more before you go, just a quick one. Is the graphite usable in batteries, the graphite you're producing?
Can be. What you'll find is actually the graphite, the market for lithium-ion batteries is actually quite small. It's about 2 million tonnes per annum from memory. I could be wrong. But we're seeing markets emerge with our partnership with Mitsui that are significantly larger. Steel making uses graphite or carbon products, not just in the blast furnace, but also the electric arc furnace, water purification, the production of anode, the bitumen and asphalt industries, energy storage, where graphite is used as a storage medium. So we see a plethora of potential applications outside of lithium battery market that require no post-processing. So they're the markets we're chasing, high confidence, large volumes that are still going to attract very decent prices for our product.
All right, Glenn. Well, thank you very much for your time today. That was fascinating. Have a great weekend, and hopefully we get you back again soon.
Pleasure. Thank you, Manny.